Hello, everyone. Welcome to the market update for Tuesday, January the 5th. We had a nice rebound today from the sell-off that took place yesterday on the first day of the new year, and but it does worry you a little bit when you get that kind of a sharp sell-off like that. That is it the start of something bigger? I'm not quite sure that it's the start of something bigger just yet. I think a lot of it had to do with a little bit of concern with the Senate race there in Georgia. The voting is today for that runoff. The market wants a little bit more stability. I think it prefers to have a mixed Congress where Republicans hold the Senate, Democrats hold the House, create a little bit more gridlock, and so there could be a little bit of volatility based on those results. Now, ultimately, though, I mean, even if the Democrats do take both those Senate seats, one of the bullish things for the market could be that they would immediately send out $2,000 stimulus checks. Obviously, that would definitely jumpstart the economy, or maybe overheat the economy at this point. But that likely wouldn't be seen until a little bit later. So I could see the market selling off early this month, and then maybe rallying with that possibility that the economy really starts heating up. Maybe rally off on that a little bit later. It could also bring in concerns with inflation, though, too. And the market really hasn't dealt with inflation for a long time now. And so, again, the market reacts on uncertainty, or tends to sell off on uncertainty. And that would be something that could cause a much bigger sell-off down the road. But with the market rebounding today, I like the fact that it opened lower and then rebounded. I didn't want it to gap up real big. Sometimes you get a gap up after a big sell-off. It's just a sucker's rally for another move lower. And another thing too is I mentioned a lot that ahead of big sell-offs, a lot of times there's a lot of warning signs. We see them a lot of times in these updates that I point out. And if you've been following the updates the last few weeks, there's been a few that have shown up saying that maybe we're due for a little bit of a pullback, or that we could get a little bit of a pullback. We saw some of the extremes in the buy-sell ratios, which we'll look at here in just a second. But we weren't seeing a lot of them lining up that were really, those red flags that to tell you that's really a good idea to get to the sidelines or to tighten up stops and things like that. So that's another reason why I'm not real confident that this sell-off yesterday is going to lead to a much bigger one. We could get another down day, though, another follow-through to that selling yesterday, but I don't see a massive correction right here just yet. Hopefully I'm right, especially with some of the bullish positions I'm in. But like I said, I'm just not seeing the clues yet. Now, you don't always get clues, and that's part of trading. You have to realize that. But you do enough times to where I have a tendency to hold off on worrying about a sell-off until I start seeing more of those signs. Otherwise, we could be jumping in and out all day long with rallies and sell-offs, especially sell-offs. You could be panicking every time there was a sell-off, and yet they're common. They happen all the time. You're going to get down days all the time. What keeps you from panicking and getting out every time there's a sell-off? Well, you learn to recognize that sometimes they're just temporary or insignificant, and other times they're ones you really need to pay attention to. All right, going down the direction alerts here real quick. Not much to point out with the sell-off. We pulled back on some of the indicators. Momentum is pulled back to hold. Breadth is still in the high area, but off the extreme area, which it was starting to move into. And sentiment is back into trending here. It's out of the complacency zone. So from this standpoint, we're in an area where the market could definitely continue to rally from here. We're not in any sort of overbought or extreme condition there from that standpoint. Now, looking at the buy-sell ratios, we were starting to come together last week, and we've come even closer together with the selling that took place yesterday. So we're definitely in an area where the market is an extreme. It could start to rally. We could start to rally, and we could start to see these get more extreme from here. We could also see them come even closer together if there's a little bit more selling. But I don't see anything there that's indicating any sort of extreme signal. And sentiment, same here with the sentiment indicator here. It's backed off. It's nowhere near that. I shouldn't say nowhere near, but it's pretty far away from that extreme area, which is that red line right there. That would point out that the market is really kind of stretched. And not to mention the fact that when we look at the charts of the S&P and the other indexes, that we've been kind of in a consolidating period anyway. I pointed that out last week as well. And that's one of the reasons why I thought in the new year that we kind of start breaking out and taking off, but we might. In fact, let's take a look at that here. Let's go to our market update watch list here. And this is what I was talking about. We have reached some new all-time highs during this period, but we've been kind of moving sideways overall, and which means that we should end up breaking out of this and moving higher. And sometimes when you're in a really tight sideways range like this, one of the things I always say is that whenever you see a stock moving sideways or a market moving sideways, you want to pay attention to the trend or direction it was moving in before it moved sideways. That's where it's more likely to go after it's moving sideways. However, sometimes when you're in a really tight range like this and it's moving sideways, you sometimes have to get a drop to really wake up the buyers. When you're moving real in a tight range, it means that you don't have hardly any buying aggressiveness, no selling aggressiveness, and it's just in a really tight range there. Sometimes you need something to shock people to do something. And so it's not uncommon to see out of a tight range like that, to see a quick drop and then see things take off. And that might be what's happening here. We had that tight range, you had that sell-off yesterday that maybe woke some of the buyers up, some of the people that were waiting for a dip, because that's what can happen right here is you get buyers, but some of them are like, man, I'd like to buy right here, but I really like it if it dips down a little bit lower. I feel like I'm getting a discount, or feel like I'm getting it at a better price. And then you get that sharp dip right there, and then people jump right in immediately. So that can sometimes wake up the buyers. It can also wake up the sellers, though, too, and they can become more aggressive. And so, we'll keep an eye on this week to see if this little rebound right here. This is what I was mentioning earlier. I like the fact that it opened lower. I was actually hoping it would open down here at the lows of yesterday, because there's some support and resistance in that area. Resistance from back here, support into here. And so I was hoping we'd get like a open much lower there and then rebound from that. But we did. We got just a small move down. So we'll keep an eye on this. I'm not going to be really comfortable until I see us get to the upper part of this whole bar from yesterday, and especially if we could break out above there, get to a new all-time high. I'll have a lot more confidence that the market can rally from there. Until then, you always have to worry that this is a little bit of a sucker's rally. Remember, we talk about how stocks will tend to retrace about 50% of their moves. Well, it could also relate to 50% of a bar. This is a one-day trade or a one-day movement right here. And actually, you could probably include the intraday low, and we're probably at about a 50% retracement with that intraday low of yesterday's move. So we're in an area here where, although we're rallying today, it could easily roll over and drop from that. So we'd want to see a couple more days of that moving up to have a little bit more confidence that we're rebounding nicely from that Monday drop, especially with the volume. There was huge volume yesterday in that selling. The VIX spiked up pretty high. We'll take a look at that here in just a second. So that's a little concerning. And you'd want to see both the market moving higher and see that VIX coming back down a little bit to have a little bit more confidence that we're rebounding nicely from that selling. The other indexes are pretty much looking the same. Dow, has not too much different. The chart isn't too much different from the S&P, NASDAQ 100. The Russell 2000 is one that I've been keeping a pretty close eye on because it's been it's contained a lot of the leadership stocks in the last rally. A lot of the small caps have been kind of leading the way, which happens. It's usually not as common to see small caps leading the generals, but it happens a lot, particularly in the later stages of rallies. But as you can see here, the Russell 2000 has rebounded quite nicely from yesterday's sell-off. It's almost at the top of and going past the high of yesterday. So that's a good bullish clue right there that the Russell 2000 is outperforming the other indexes here, and it might, especially if it can get above that high of yesterday, it leads me to believe that the other indexes will follow. That they're probably with a day or two from doing the same thing. So that's a good bullish sign right there. Although we would want to see that move happen with a lot more volume. It doesn't have to equal the volume of yesterday. Sell-offs like that tend to have a little bit higher volume spikes, but you'd like to have above average volume, and that's that. Right now we're at a little bit of a light volume day, so that is a little bit of concern. That doesn't mean that volume can't come in tomorrow, and maybe it does if the other indexes start following through and getting up close to those previous highs, yesterday's high, and we might see more volume there. But we don't want to see, if we rally up for a couple of days and we do it on very light volume, that's not a great sign after a big sell-off like that. So that's something we'll keep an eye on as well. Moving on to the other charts, bonds are still, let me take the volume bars off here. The bonds are still in this downtrend. We're clearly seeing lower highs all the way down. Now we did see an equal low right here, and we are at a little bit of a support area right here that we might want to keep an eye on, because if we can somehow reverse that and break out above this high right here, it could signal a possible reversal in bonds. But until then, we're assuming that especially with the down day today, we're assuming that the bonds are going to continue to move lower or trend lower until we see different, until it changes that pattern. Gold has been interesting. We mentioned last week that although I wanted to kind of clear this high right here to get a real clear higher high, we did point out that we were seeing some near-term higher highs, higher lows through here. And then we had this big gap up yesterday that we've held again today. And although gold is starting to get into that overbought area here, into that extreme, gold and silver tend to, when they start moving, they tend to stay in those extreme overbought ranges for a while. In fact, a lot of commodities traders will tell you you don't want to try to pick when gold and silver are starting to move, because a lot of times it's too hard to pick it. What a lot of those traders do is they wait until that that trend gets established, and then they buy into it. You can see here, we go to a 1-year chart so you can see this a little bit more clearly. So here you were consolidating right here, and then you broke out. A lot of commodity traders like to start buying in right here, even when it looks like it's extreme and it's gone too far too fast, because you often get these really big runs that happen after they reach some of those extreme levels. So to buy into that move right there, I think is wouldn't be a problem, because it is in that kind of doing that. It is acting like an uptrend in the near term with this higher highs, higher lows. And then it's in that kind of extreme range that it could stay in for a little while. Again, though, you're right at a resistance area, so you'd probably feel a little more comfortable if it could break out above that area. But that this is definitely looking like it's reversing trend and looking more like it's moving back into a stronger uptrend, longer term stronger uptrend. Near term, it's already in an uptrend. A near term uptrend looks like it's possibly moving towards a longer term uptrend again. So we'll keep an eye on that as well. Going to oil. Oil had a big jump today. It looks like it was kind of consolidating through here. And so, definitely a clear uptrend that oil has been in for the last little while. I know it's hard to maybe consider buying into oil, knowing some of the, fundamental factors out there that producers will start producing more, especially as prices are moving up right now. But the trend's up, trend's still up, and those stocks have potential to continue to move higher as well. The dollar has been in a downtrend. It's still in that downtrend. It's getting in close to an extreme. You'll hear reports on CNBC that there are a lot of people that are short gold, or short the dollar. And when it becomes crowded like that, when too many people are in the same trade, it can reverse. It's usually a time to reverse. So this is definitely not an area where I'd say to short the dollar if you're considering that, especially as we're very near that extreme range. And the problem is that when it reverses, even if it reverses a little bit, you get that short squeeze where you get people that have to get out. They have to buy to get out because they're short, and it could spike up very strongly. And so it could go against you very quickly. And so the potential reward of it going down much further isn't worth that risk that could spike up overnight or real quick and really give you a big loss. So you don't have as much reward potential for the risk. And so it's not a great entry point here, but the trend is still down. And so you're not, I wouldn't say to buy the dollar here because there's not evidence yet that trend is reversing. As a trend trader, you're not trying to pick the bottom. You're trying to wait until that reversal becomes a little bit clearer, or at least that there's some clues there. I don't want to try to just pick the bottom. I'd like to see, at the very least, maybe a move above the previous lower high. So go to a higher high at some point. Or maybe you do get that really big bullish candle, a big bullish reversal, short squeeze day that happens, and you buy into that. But you want something that's at least signaling that it could be starting to reverse. I just haven't seen that yet. And by the way, the weaker dollar is also more bullish for commodities. So oil and gold and silver, it's not surprising those are trending up with the dollar moving lower. And here's the VIX, is what I was showing you, or I was talking about earlier, where the VIX spiked up pretty good yesterday. It's coming back down a little bit after opening higher, but that's still a pretty good move. You'd like to see the market move up a little bit higher and see that VIX come back down to this lower area right here. Would be a good sign that the market could break out and go higher. So we'll keep an eye on that as well. But it's good to see it come down quite a bit today with the market rally. All right, real quickly, let's do a couple of specific stocks. I'm just going to stay in one sector, which is the top sector. Retail has now moved into the top sector above computer technology, which has been up there for most of the time, or most of the last few months. There's some good stocks here in the retail sector. One of the ones I really like, I've mentioned this one before, but JMIA right here, JMIA. And let's switch the signals on here. It's been a nice strong uptrend. It's now pulled back. It also looks like it's kind of pulled back in a little bit of an ABC pattern right here. And now for the training today, I forgot to mention this at the beginning of the class, but the training today is going to be on entry techniques, just a few basic entry techniques. But obviously, when we talk about these, we usually talk about these stocks. We're looking for a buy signal. If looking for a 98 strength rank. Well, this is a 97 strength rank, so it's a little bit lower. But I like the pattern. I like the stock, but you could wait for that confirmation for this to go back to a buy signal as an entry technique. Now we can use this as an example today for other entry techniques that you can consider, but that would be the main one based off of this process here, and it's a little ways away from going back to that buy signal. It's kind of on the left side of that hold box there. but waiting for it to go back to that buy signal that'd give you a good confirmation that this thing was starting to trend back up again. Another stock in the sector there is the retail sector there is Kirkland's, KIRK. We've looked at this one before as well. This has a 99 strength rank, but it's pulled back pretty nicely here. Nice strong uptrend. So you can see from some of these past moves where it's pulled back, it's gone to that hold signal. Here it went back to buy and then back to hold again. But it was, it was giving you, it was close to moving back up again, and then you had this little run, pulled back, went to hold. A nice run up here. It's pulled back on the hold, but you're seeing here was kind of an equal high right here. You had a higher low right there, and then a higher high, higher low, higher high. Now this has gone to a little bit of a equal to low, a little bit, maybe more of an equal low right here. There's a little bit of support right here, so you want this to kind of hold this area here. Wouldn't want it to dip back below there. But again, you're waiting for it to go back to a buy signal anyway. So, but if it did dip a little bit lower, I'd be a little bit concerned that you might be in it might pull back a little bit deeper. Maybe it pulls back to this breakout area here. And you might want to wait on that a little bit. But there again, if you wanted to kind of put it in a watch list, even if it did dip down below there, you're waiting for it to go back to a buy signal anyway. It might dip a little bit lower to that area, then pull back up and then give you a buy signal somewhere in there where maybe it starts trending back up again. And then one more I'll look at here is this Nautilus NLS 99 strength rank. What I really like about this is the possibility of an inverse head and shoulders pattern right here. So you have, this looks like the left shoulder, the head, and it could be developing the right shoulder right here. You could wait for it to go back to that buy signal as confirmation. You could also use your neckline right here if it breaks back above that neckline. And again, the rule of thumb on this is if it does break above that neckline, then it should, most of the time, not always, but a lot of times it will go up about the same distance as the base of the neck to the base of the head to in this case, the bottom of the head, because it's inverse. Project that distance upward. And it gives you a little bit of a target area. If it gets that far, though, it's probably going to come back up and retest these highs as well. So that all of this would be a kind of a target area for this stock to get to if it can get back to that buy signal or breakout. Actually, in this case, breakout above that neckline there. All right, so that kind of takes care of the market update. Let's, while we're here, let's kind of go into some different basic entry techniques. Now, there's a lot of different ones that you can consider, and this is not meant to be an all-inclusive every entry technique out there. There's just too many of them. What you like to develop, though, is a few different ones that you like to use. Obviously, the waiting for it to go back to the buy signal after getting having a strong trend and getting a bullish pattern, that's the easiest. You're just waiting for it to go back to that buy signal. It's pretty straightforward. That the buy and sell signals are based on algorithms that are, when it goes to that buy signal, there's an increased probability that stock is going to continue to move up. If it goes to a sell signal, there's that increased probability it can continue to move down. And so that's a real basic kind of black and white type system there, or green and red system, I guess is a better way to put it. But I also like to have techniques, entry techniques where I want to be more aggressive. What if I don't want to wait? Let's go back to JMIA here. By the time this thing goes back to a buy signal, the stock could be at, $43 or somewhere in this area right here. And so to get that buy signal confirmation with the stock right around $35, $36, I'm giving up $8 before I get that confirmation. You might have that happen a few times and say, boy, I could tell this thing looked like it had the potential to go higher. I recognize it had the potential to go higher before that. There's a nice strong uptrend here and a possible ABC pattern right here. And by the way, if you haven't learned about ABC patterns, there's a training on that in some of the previous few weeks. You could kind of look for that in the update. Each of these updates, I do a little training at the end, and you could kind of look for that there. But this one, so I could look for a more aggressive entry. Now, obviously, you have to weigh that, because with a more aggressive entry, like I said, those algorithms, the buy sell algorithms, are based on a system that will tell you when that stock is now acting more like it wants to go higher, and so there's a lot more confirmation there. But like I said, there's a price for that confirmation. Well, there's a price for being aggressive too. You get too aggressive, and maybe this is just a little bit of a bounce right here, and it's a one-day bounce, and it ends up making another bigger move down. But that's why I like to have a few different techniques. If the market is feeling really, really bullish and you're pretty confident about the trend, then you might want to not give up $8 before you get your confirmation. You might want to use a more aggressive entry technique. Okay. Now, what are some of those different techniques you could use? Well, one, and this goes back to the candlestick class, is you can look for just a bullish candle. So we're going to switch from the signals here to candlesticks. And we open lower, so we gap down right here, but we're looking to close higher. Now, we're not only looking to close higher here for the day, but it'll probably be higher than the close from the day before. So it should be showing that the stock is gone positive today. Barely, but it did go positive today. That's a bullish reversal. Now, it could also be considered a bullish reversal even if it closes lower than the close of yesterday. The fact that it opened lower and was going to close higher, but still lower than the day before, that's a little bit of a bullish reversal candle. Although you'd like to see that close at the high of the day in that case. But you could look for just a bullish reversal. Now, I can tell you, bullish reversals, bearish reversals, they're very short term, and they don't always hold. They don't always lead to new uptrends. In fact, I could probably find an example. See if I can see one here just in the past that maybe jumps out. Well, here's a little bit of a bullish reversal back here. Here you had a big down day, had a bullish reversal, and it did rally for a couple of days, but then, boy, it really fell apart quickly here and dropped. So it doesn't mean that you get that bullish reversal that this is going to be heading back up. But if you're really wanting to be aggressive and you're trying to get in, well, here's also a little bit of a bullish reversal. Here you were dropping right here. You had an up day right here. Looked like maybe it was starting to move back up. And that's actually what creates these ABC patterns. Is you get that drop, that first pullback. It looks like it's starting to move back up, and those eager buyers are wanting to jump in on any pullback. They're buying any dip, and it's not done selling yet. It rolls over and has another move down, and that wipes out the aggressive buyers. And it's usually the dumb money that's doing that buying. They don't have a system they're following or anything. They're just it's down today, I'm going to buy it because it's going to go back up tomorrow. That's kind of their plan, which usually doesn't work out very well in the long run. But that is here you could say, well, yeah, this is a more aggressive entry with that bullish reversal, but I'm not doing it after the first move down. There's your suckers rally right there, creating that ABC pattern. this is a little bit more likely that it could start to move up from there. And so you might like those probabilities a little bit better. You can go back here and say, well, this one might have failed for the same reason. It only had one pullback day right here. People bought the dip probably too quickly, and so it wasn't done falling yet. So I had another move lower. Now, if you want to go a little bit further, maybe that's too aggressive, but you don't want to wait for it to go back to that buy signal all the way up here. Is there another technique that you could use that's kind of intermediate, not as aggressive as just a bullish candle? Well, one of the ones that I like to use it's real simple too, is you get a bullish candle. So you get a reversal candle, a bullish reversal candle like that. And then you wait another day. See if you can get a close above the high of the previous day. So there's the high of today. I might wait till tomorrow and probably near the end of the day tomorrow because I'd like to see it close above the high of the previous day, not just trade above the high of the previous day, but if I get a close above the high of the previous day, it'll be much more likely now that the stock is moving higher. Now, the danger of that could be that you get a really big move the next day off of that bullish reversal candle, and maybe it's so big that not only do you get the close above the high of the previous day, but also triggers the buy signal. Well, that's going to be the risk of any decision you make. It's going to happen to you. I promise you that you're going to decide to wait one more day, and then it's going to jump, and you're going to be like, why didn't I take the aggressive approach? Well, I'll tell you, there's going to be plenty of days too where you take the aggressive approach, and then it drops further, and you're like, why didn't I wait one more day and get that close above the high of the previous day? That's trading. You just have to accept it as part of trading. The good news is that in the long run, things tend to even out. There are going to be days where you have that more aggressive trade. You decide that to be that more take that more aggressive entry, and you get the big move the next day when everyone else is chasing it. And you'd have to remember those days, because a lot of times when we tend to think of days when or things that tend to think of times when it didn't work out for us and only focus on those. So we feel like it always happens to us. Oh, it always happens to me. I decide to be aggressive and I get burned, or I decide to wait that extra day and I miss out. We don't always remember when it did work out for us, and it happens all the time. What we have a tendency to do is when it does happen for us, we tend to think how smart we are. Oh boy, I was really smart for doing that. That was a smart move on my part. I knew it was going to do that. We get this confidence, and but it distorts the reality. And when I tell people these things tend to even out, these bad experiences tend to turn into good experiences. The key is to be able to stay in the market long enough to be able to experience both. And that gets into your money management plan, which we'll have a training on in a later class, is how to set up a money management plan where I don't risk everything on every trade I'm getting into. All right. So, and by the way, one of the most basic techniques is a close above the high of the previous day, or a close below the low of the previous day. One of my favorite exit techniques, which I'll probably talk about when I talk about exit techniques, is to stay in the trend and stay in the trade until you see a close below the low of the previous day. If you take a look at this big run up right here, how can I, have you ever been in a trade where you're like, it goes big for a few days right here, and then you're like, oh man, that's a big move over a couple of days. I don't want it to go back down again. I'm getting out. And then you see it make this big move right here, and you're like, man, it always happens to me. I can never get these really big moves. Well, one real simple technique is you could get out on a close below the low of the previous day. When did we finally close? The key is close below. When did we finally close below the low of the previous day? Right here. Now, you did give up that last little run up right there, but you caught a little bit more of the trend by waiting for that technique. So when you get a pullback, you can kind of do the same thing. Let's switch to another stock here. Let's take a look at Nautilus right here. Now, we talked about wait for it to go back to the buy signal. We also, this type of entry technique could be based off of a breakout. In this case, a breakout above that neckline. So you could buy the breakout there as soon as it moves above that neckline and it closes above that neckline. Would be something I would look for. That neckline is not real even right here. It'd be kind of slanted a little bit. So it'd actually be up here that you'd be looking to enter in on that neckline there. But you could buy, and a lot of times on breakouts, so I'd like to see a little bit more of a, like this was a sharp pullback and then it broke out. I don't like to buy those breakouts very often because there was a lot of consolidation down here, and you can see this happens a lot when you have a sharp pullback and then it breaks out higher right here. You get this a lot where it's a false breakout that drops. Now that was extreme where it dropped down on a gap down right there, but what I like on the breakout trades is if you go back to that chart patterns class that I taught a couple weeks ago, I like those bowl-shaped moves. You know, couplet handle patterns. The inverse head and shoulders pattern is kind of like that, where you have kind of this bowl-shaped move to it, and then you buy the breakout of that. Or if you do get a handle where it comes back up here and forms, usually it'll form that handle right near that breakout area. As soon as it breaks out above the handle area, buy that breakout. Those are, I tell you, if you get really good at recognizing those bold moves that break out, you'll make a lot of money. You're not always going to make money. It's not going to always work, but you'll make enough money in the long run to pay for the times where it doesn't work, more than pay for the times it doesn't work. It's just a great pattern to trade, great pattern to look for. And by the way, you could end up getting kind of both right here because you have this kind of inverse head and shoulders look to it, but if it kind of works its way up like this over a few months or whatever, you know, it'll create that larger bowl shaped move right there, and you could buy that breakout when it does, and then when it breaks out, you also have a target area to look for because it would tend to go up about the same distance as the top of the bowl, the bottom of the bowl. So when I do teach exit strategies, it's going to be probably a little bit repetitive. I'll probably talk about some entry techniques in that exit strategy because they go hand in hand. You can use some of these for these things for entry decisions or exit decisions a lot of times. But what else could I use right here? Is, you know, what if I don't want to wait for that breakout? I don't want to go back to that buy signal. It might take too long. Well, here's your pullback right here. And you're basing it off of the pullback right here and the possible inverse head and shoulders pattern. Why not wait for a close above the high of the previous day? We closed above the high of the previous day? We haven't yet. Remember that it's above the high of the previous day, the intraday high of the previous day, not the close of the previous day. So here's the intraday high. So here's your drop right here. We didn't close above the high of the previous day on this drop. Here's a bullish reversal day. So you might have seen that bullish reversal day, and you could have maybe gotten in on that bullish reversal day, or maybe you said, okay, I want a little bit more confirmation in that bullish reversal day. There's the high of the bullish reversal day. I'm going to get in on a close above the high of the previous day. Not in this case, it dropped again, so it would be now you'd use the high of this day right here. Then you had this day on Monday. It traded above the high of the previous day. It traded above the high of last Thursday, but it didn't close above there. Today, it traded at the high of the previous day, but it hasn't closed above there. It might not close above there. Maybe tomorrow it finally makes a move where it closes above the high of the previous day. Okay, that could be your entry technique right there. Now, I wouldn't want to have the system just based on that alone. I mean, that's a real simple approach, because then if I got in on the close above the high of the previous day right there, then I could my exit strategy, this would be shorter term, because if you're in this thing longer term, you wouldn't want to get bounced out of a trade too quickly. But if I was looking to maybe just trade this move up to that breakout area right there, I could use that breakout area as a target. I could also stay in this until it closes below the low of the previous day. So let's say it moves up a couple days right here, and then it ends up having a down day and it closes below the low of the previous day. I could use that as an exit signal to get out. But that's a very quick exit signal, and you can get bounced out of some really good trades also with that. Like you look back here, this thing started to move up, then it closed below the low of the previous day. I did get a, that was a signal to get out, and I could have gotten out with a decent little move right there. But look what happened. I missed out on that move because it was a little bit of a quick exit. But that's what you're weighing. You're weighing, do I use aggressive entries or aggressive exits? It'd be great if we could get in at the absolute bottom, get out the absolute top, and every time it would work for us. I'd love that trade management plan because we'd never be wrong. But that's why you have to be patient with your approach. That's why there's not a perfect approach. And that's why it should be balanced out. I balance it out a lot of times with market conditions. If it's a very bullish market and I'm pretty confident about the trend, and why wait for very much confirmation? I mean, just give me something small that I can be confident enough to go ahead and get in. But with the way things have been the last couple of weeks, where we've been back and forth, and we had a sell-off day yesterday, there could be a chance that this leads to another drop. Well, I might want a little bit more comfort. I might want to wait for it to go back to that buy signal because these stocks aren't going to likely to go back to their buy signals if we get another 500-point drop in the Dow. I mean, and so that would be a good time to look for more confirmation, to be a little bit more certain before I'm getting in. Maybe I'm in between. The market is looking pretty bullish, but not so much to where I want to use a real aggressive technique. That you could look for a bullish reversal candle, then look for a close above the high of the previous day or something like that. Now, there's another one that we could apply, which is based on a trade I taught you a few weeks ago as well, that 382 to 618 trade. It was based off of looking for larger ABC patterns using the Reversal app. And you might want to review that class to make a little bit more sense. You need to review all these classes because they all kind of tie in together. And at some point they do. But if you to switch to the Reversal app, you just click on this little button right here. It'll turn blue. And when you go into your muscle stocks tab, you're going to get different muscle stocks. You're going to get all these different scans and things are going to change. They're going to be different. And to get back, you have to click that button again to get back. So that's very important to remember, because if we go into the muscle stocks here, it looks like things are system's slowing down a little bit. I'm going to go under the power play scans. And let's look at a stock that is kind of familiar to us. Let's look at Zoom video right here. Now, I showed you a little smaller pullback ABC pattern on JMIA just earlier. This would be an example, maybe a larger ABC pattern. You have this trend running up right through here. This looks like this could be wave A, wave B, wave C of a larger correction. Now, in that, you probably need to go through the retracement class, learning how to use the retracement tool, and the ABC patterns class I taught a while back. But one of the trades was you find these larger ABC patterns, and you use your retracement tool. You're not looking for the retracement of the trend here. You're looking for the retracement of the ABC pattern itself. So you want your retracement tool to grab that high and that low and show you where the retracement levels are. It's going to show you a 382 for 38.2%, 50%, or the 618 or 61.8%. And in that trade I showed you, you wanted to enter on the 382 and then get out on the 618. It was just that quick trade. But you could use that same technique to enter your trade, even though you might choose a different exit strategy. Maybe you enter in on the 382 of that ABC pattern and get out when you get a sell signal or something, or I mean, you can, there's a lot of different, we'll talk about exit techniques later, but there's different exit techniques you could use. Now, how would that look here if we used our retracement tool? Well, I was having some issues with the retracement tool. It might be on my end. I might need to clear my cache on my computer, but to make it easier, I'm just going to switch to a 3-month chart here real quick to zoom in on that ABC pattern. And then the retracement tool is this little button right here. So it grabbed the top or beginning of that ABC pattern right there, the potential bottom of that ABC pattern right here. By the way, that could end up still going lower, which would make all these numbers change a little bit. If it went lower, then that low for that retracement tool is going to go lower as well. But let's assume this is the low right here. I had a bullish, we actually had a bullish reversal yesterday on the stock, even though the market was down pretty big. Could I do the same thing here where I trade that bullish reversal, or I wait for a close above the high of the previous day? Well, this big of a pullback, you probably want a little bit more confirmation on your trade, because you've seen a few of these little pullbacks that have failed and gone lower. This could be a downtrend. It might not be an ABC pattern. It could be a downtrend that the stock is still in. And that's why you get a little bit more confidence if you get that 382 retracement. Well, here it shows you where that 382 retracement level is, and it tells you the dollar amount. So I could put an order in to buy the stock at $432 or something like 430, or you want to be real specific, $432.65. And that could be my confirmation that I'm looking for. Okay. By the way, there's another stock that looks a lot like JMIA that has that kind of that ABC pattern. Well, first of all, let's switch out of this. So to switch back out of this, you're going to go to find that. It'll be a blue button now, but you're going to click on that button. It'll switch us back over to the trend following site. And by the way, if you have a lot more curiosity about that reversal app that I was just in, if you go to the learning center, there's some videos on that you can learn a little bit more about that tool and how to use it. I'll be doing it in some trainings coming up where I'll do some trainings on it where we kind of apply what's gone over in those recordings. But if you can't wait that long, then you're real curious, you can jump in there and kind of review that. All right. So let's look at BLNK. This is a stock that's been pretty hot lately. A nice little uptrend. Let's take the retracement tool off. I don't need that on there anymore. Let's go to a 6-month chart here. There's a long range it was in. Had a nice little burst out of here. Had a nice little kind of pullback in through here, and then took off again. It looks like it's kind of done the same thing here. Had that initial sell-off that tried to bounce, came back down. It has a nice little bullish reversal bar today. Let me just quickly take a look at the volume behind it. I have a light volume though, so that's other. If you get a nice bullish reversal bar and higher than normal volume, then that's a reason to be more aggressive and not necessarily wait the next day. But if I see a bullish reversal bar like today, but it's on light volume, that's really light volume. We only have an hour left in the trading day. We're not going to exceed the volume going all the way back to the middle of December. So on something like that, I might say, well, let's give it one more day and maybe use a close above the high of the previous day. So let's tomorrow to see if we close above today's high. And now, if it closes above today's high on lighter volume than today, that wouldn't be a good sign either, because it could mean this is just a little bit of a sucker's rally and we're not done correcting it. This thing just roll over and go lower. But if you had a nice little spike in volume, and tomorrow we get a higher or average or above average volume, at that point you could get an average volume, but at least be higher than today. Higher, if we get higher today and even average volume, and we close above the high of the previous day, that's a pretty good confirmation entry. Or you could wait for this thing to, I think this is at a hold signal right now. Wait for it to go back to buy, which it's pretty close to doing, by the way. It's real close to going back to a buy signal. So hopefully at least this gives you ideas. My goal for today's class was just, okay, let's look for, we already have kind of the real confirmation entry with the signals, or the real simple entry and exit with the signals. Can we look at a possible aggressive entry, and can we look at something that's maybe not quite as aggressive? So I would say the aggressive entries would be that bullish reversal candle. A little bit more confirmation would be that get the bullish reversal candle or close above the high of the previous day. But I'd even throw in the breakout. If you closed above that breakout, like we saw on, we were talking about that with NLS, I think it was. Let's pull NLS up here. Whether you get a close above the neckline right there and you're buying that breakout, or if this ends up being kind of a bowl-shaped move and it closes above, this breakout area, you get a close above there. I'd throw that into not overly aggressive. It's because at that point you're probably already trending up at that point. That'd be a pretty conservative entry point. And by the way, you can combine these too, where you could buy a small shares of stock on an aggressive entry, but so small that if you're wrong, you're not going to lose too much if you have to stop out of it. Then I can buy some more on a buy signal, and then I could buy some more stock and maybe be more aggressive in buying if it breaks out above that inverse head and shoulders pattern, because now it's really showing me a lot of bullish signals here. That's when you want to start buying, increasing your position size when it really is looking like you're right. And then if it breaks out above this bull-shaped move, you really want to buy a ton, because there's potential this thing could go up about the same distance as the bull, top of the bull, the bottom of the bull. And, so there's lots of different ways you can use these techniques. And don't get overwhelmed with, man, that's too much. My brain can't wrap around, I can't wrap my brain around all that. Well, take it smaller. Try just one technique for a few weeks. Do some virtual trades or practice trades with it, and then learn and try another one. And go out there and learn from other people. Other people have good entry and exit techniques as well, but additional ones they could use. And when you really get a big, get a lot of them, a lot of different ones that you can use, then what you do is you can apply them to different situations. I do it all the time, where it's like I'll have my favorite entry techniques, but I might come across a situation where I'm like, oh boy, this technique works perfect with this pattern or this market condition I'm seeing right now. And you might find one that just works very well for a while, and then maybe it doesn't work as well, and so you adjust it or change it to something else. If you're in a really, I'll tell you what, if you're in like a really hyper bullish market environment where you're like going up every day, that waiting for that close below the low of the previous day before you get out is gonna get you most of that trend. You're gonna capture most of that big move in that condition. If you're in a real sideways market that's kind of been back and forth, don't use that technique as an exit strategy because it's too quick. And when the market conditions are back and forth, it's going to trigger, you're going to be getting in and out of trades all day long. So that's where you can start making those adjustments and using them, but learn them first and get good of a few. And then when you get a big, like I said, when you get a large amount of them, then you can start applying them to different situations. And you'll know when to apply them in different situations because by that time, you're going to have a lot of experience using them. You got to start somewhere. So just start and build your skill level. All right, that's all I have for today. We'll see you on Thursday for the stock specific class. Bye now.